Hey everyone, and welcome back for another deep dive.
Yeah.
This time we're tackling a question that I think is on a lot of people's minds these days.
hmm
Is owning rental property really worth it?
Yeah, that's the big question, isn't it?
Yeah,
And we've got a ton of great resources to dig into for this one.
we do. We've got articles,
Articles,
podcast excerpts.
podcast excerpts.
We've got it all. We're looking at roof stock,
Yep.
Investopedia,
Classic.
and even a piece called Is Owning a Rental Property Worth It? Which, I mean,
Straight to the point.
straight to the point. I love it. But our goal here isn't just to rehash generic advice. We want to help you listening right now figure out if this is the right move for you, for your specific goals.
Absolutely, because I think there's so much hype out there
Oh, yeah,
that you really need to understand what you're getting into.
totally. So let's start with the WHY.
Yep.
Why do people get drawn to rental properties in the first place? What's the big appeal?
I think Roofstock said it best right in their intro. It's that dream of building wealth,
Yeah.
of diversifying your portfolio beyond the typical stocks and bonds, having something more tangible.
Makes sense. Okay, so we've got the dream, right? But then comes the reality check.
Mm-hmm.
And that's where I think Roofstock's 20 pros and cons list is super helpful. It's comprehensive, so we'll use that as our roadmap.
Sounds good.
First up, diversification.
Okay.
We hear that a lot with investments, right? But what makes real estate different in this sense?
Well, Investopedia explains it pretty clearly.
Okay.
Real estate tends to be less volatile than stocks,
Okay.
but it still generally increases in value over time.
So you're not on that crazy roller coaster ride of the stock market every day.
Exactly. It's its own beast, essentially.
I like that, its own beast. Roofstock even went as far as to compare returns on rental property to the S&P 500, which I think most people have at least heard of.
No, it's a good benchmark.
And what they found was similar profits,
Yeah.
but a much smoother ride.
Way less stressful.
Way less stressful. Okay, I'm intrigued already. But there's another piece to this.
What's-
It's the control aspect. Unlike with, say, stocks, where you're kind of just along for the ride,
Right.
with rental property, you actually impact what happens.
That's right.
The excerpt we have from the Inklastrad podcast really got me thinking about this. Renovating strategically, choosing your tenants carefully, setting the rent prices.
You're the one calling the shot.
You're calling the shots.
Yeah,
It's a lot more hands-on.
it is.
But for some people, that's appealing.
Oh, yeah, the control's a big draw for a lot of folks.
But let's get to what everyone really wants to know about. The money. How much can you actually make from this?
Right to the bottom line.
Right to the bottom line. And that's where that article, Is Owning a Rental Property Worth It?, comes in clutch.
It does. It gives a really concrete example.
They do. They use the example of a $250,000 duplex. Let's say you're putting down 20%.
Okay.
That's 50 grand up front, right?
Right.
Their estimate for the loan payment on that. Around $1,400 a month.
Yeah, that's a good chunk of change.
Whoa, $1,400 a month. And that's just the loan, right? Not even property taxes.
Nope. Not even property taxes, not insurance, not any of that stuff.
Oh, my goodness. See, and this is where I think that Finance HQ article we pulled is important.
Yeah, they bring up a good point.
They throw a little cold water on this whole passive income idea.
Yeah.
Because even with a property manager,
Mm-hmm.
it's not really passive, is it?
There's always something.
There's always something. Always decisions to be made, problems to solve.
That's part of the game.
Before we get too deep into the downsides, though, I want to touch on a major perk. The tax benefits.
Ah, yes. This is where it can get a little complicated.
But potentially very lucrative, right?
Absolutely.
Mm,
Both Roofstock and the Investopedia went into this.
they did.
You've got deductions for operating expenses, depreciation. There's even a potential 20% pass-through deduction on your rental income.
Okay, hold on. Let's unpack that a little. What does all that actually mean for someone who's not, a tax expert?
Right, right. So operating expenses, those are the everyday costs of running the property.
Like what?
Maintenance, property management fees if you have them,
Mm.
even advertising for new tenants.
Okay, makes sense. What about depreciation? That one sounds a little trickier.
It is a bit more complex. It's essentially a way to deduct the wear and tear on your property over time.
So you're getting a tax break because, hey, your property isn't brand new forever.
Exactly. It loses value naturally, and the IRS acknowledges that.
Interesting. Okay, and that 20% pass-through thing, that sounds pretty sweet.
It can be. It lets you deduct 20% of your net rent income from your taxes.
There's
However,
always a however.
always a however, Investopedia pointed out that there are income limits to qualify.
Ah, so it's not a free-for-all for everyone.
Not quite.
So I'm sensing a theme here. Talking to a tax pro is probably a good idea.
Oh yeah, essential, I'd say.
This stuff is way too nuanced to just wing it, right?
Definitely. Tax laws are complex. They change constantly. You want someone on your side who knows the ins and outs.
All right, so we've talked diversification, we've talked taxes. Ready for another potential perk of rental property?
Lay it on me.
Appreciation. The idea that your property is going to go UP in value over time.
That's the hope. But it's where understanding market cycles comes in.
Ah,
Yeah.
yeah, nothing's guaranteed, right?
Right. Roofstock pointed out that U.S. home prices have risen over 52% in the past 15 years.
Okay, that's pretty good.
It is. But there have been dips along the way.
Like 2008.
Exactly. The 2008 crash was a huge wake-up call for a lot of folks.
Huge. So even though long term the trend might be upward,
Yeah,
there are going to be bumps in the road.
absolutely. And Roofstock even mentioned a nearly 5% decline in prices recently.
Oh, wow. So it's
Um,
not always smooth sailing.
Definitely not. And something the Belong article brought up that I thought was interesting.
Yeah.
2024 is an election year.
Oh, right.
And some investors get a little jittery about what that might mean for the market.
Yeah, it makes sense. People get nervous during those times.
They do. But Belong also mentioned that historically, elections haven't caused major swings.
So no need to panic.
Exactly.
Yeah.
It's just something to be aware of as part of the bigger picture.
Stay informed. Don't make rash decisions based on fear-mongering or whatever.
Exactly. Be smart about it.
Be smart about it.
Okay, I think it's time we shift gears a bit and talk about the downsides.
The cons.
Got to be realistic, right?
100%.
Hit me with it. What are some of the biggest drawbacks to owning rental property? Well, let's start with a big one. The capital and credit you need just to get started.
Okay.
This came up in both Roofstock and Belong stuff.
Got it.
Remember that $250,000 duplex?
Yep.
Well, for rental property, you typically need 25% down.
That's
A lot more than a primary residence, yeah.
$62,500 right there. Just to get in the door.
Right, and it doesn't stop there. Roofstock mentioned that interest rates are typically higher on investment properties,
How much higher are we talking?
between 0.5% to 0.75% higher than what you'd get for your own home loan.
Oof, that adds up. Anything else?
Plus, they require a minimum credit score of 620.
So this isn't something you just jump into lightly. You got to be prepared.
You got to be financially ready, absolutely.
Financially ready. And then, of course, there's the tenant situation.
Oh boy, yeah.
Everyone's got a horror story about a bad tenant.
Everyone knows someone, right?
Roofstock didn't sugarcoat it either. They talked about tenants who won't pay, who damage the property, even engage in illegal activities.
That's the nightmare scenario for sure.
Okay, I'm officially scared.
Mhm.
But Belong offered some potential solutions to that, right?
They did. They stressed the importance of thorough tenant screening.
Okay, break that down for me.
It's not just glancing at an application. We're talking credit checks,
Yeah.
rental history, background checks, the whole 9 yards.
So no cutting corners?
None. You got to protect yourself.
Makes sense. Anything else that stood out to you?
They also mentioned guaranteeing rent, which I thought was really interesting.
What does that even mean?
Basically, if the tenant doesn't pay, Belong covers it.
Whoa. That would take a lot of stress off a landlord's shoulders.
It would. Of course, that service likely comes with a cost, but it's something to consider.
For sure. But even with the best tenants in the world, you're still the landlord, right? And that comes with a whole set of responsibilities.
You are the captain of the ship.
Even if you hire a property manager,
Then,
you're still the one making the tough calls.
100%. Roofstock brought up some good examples. Major repairs.
Like what?
A new roof, a busted HVAC system. That stuff gets expensive.
Oh, yeah. Anything else?
The dreaded eviction process.
Aw, nobody wants to deal with that.
Nope. And Belong's FAQs actually mention that it can be super costly and time-consuming.
So not only is it stressful, but it hits you in the wallet, too.
Exactly. It's a lose-lose situation if you can avoid it.
Avoid at all costs. Speaking of costs, we can't forget about property taxes.
Ah, yes. The silent killer.
That can really sneak up on you, can't they?
They can. And what gets me is the unpredictability.
Okay, tell me more.
Roofstock made a good point about this. Property taxes vary wildly from state to state.
Right. It's not a one-size-fits-all thing.
Not at all. And they can increase significantly year over year depending on where you are.
So you're not really in control of that expense?
You have very little control, unfortunately.
Yikes. Okay, so we've got the big upfront costs, the unpredictable property taxes. What else is going to keep me up at night as a landlord?
Well, let's not forget about the never-ending saga of maintenance.
Oh, yeah. Even with the best tenants, things break.
Things break, things wear out. It's just the nature of owning
It's
property.
inevitable, right?
Totally inevitable. Investopedia put it pretty bluntly. Expect to shell out periodic contractor fees. No way around it.
Love the honesty. No
Nope.
sugarcoating there.
Nope. Got to be real with folks.
Got to be real. Okay, there's one more con I want to hit before we move on.
What's that?
And it's one that I think ties directly to your long-term goals as an investor. Neighborhood decline.
That's a good one.
What happens if the area around your property starts going downhill?
That's a big risk for sure.
And I know we talked about appreciation, but it works both ways, right? Things can go down too.
They absolutely can.
What should we be watching out for?
Well, the CDC defines gentrification as basically a neighborhood transforming from low value to high value.
Okay, so theoretically, a neighborhood could improve over time.
That's the optimistic view.
But let's be realists here. Roofstock gave us some great warning signs of potential decline.
They did. Things like rising property taxes.
That's a bad sign.
It can be, especially if they're rising faster than other areas.
Okay, what else?
Declining ratings for schools and hospitals.
Oh, yeah, that would definitely make me nervous.
And then the one that's always a visual cue. Lots of for rent signs popping up.
Oh, yeah, that's never a good sign.
If everyone's trying to get out, that's a red flag.
Red flag city. So it's not just about finding a good property today.
Right.
It's about thinking long term. How might this neighborhood evolve?
It's about the bigger picture.
Bigger picture. What other cons did they mention? Just so we're covering all our bases here.
A few other things to keep in mind.
Yeah.
Potential changes to the tax code. Always got to be ready for that.
Right. Uncle Sam can always throw a curveball.
Exactly. And then the lack of liquidity with real estate.
Right. It's not like stocks where you can just sell off shares in an instant.
Nope. Long's FAQ section was good on this point. Even in a Haiti market, it could take time to sell a property.
So if you need cash fast, this is not the investment for you.
Not the best choice, no.
And of course, we can't forget about the real estate market cycle.
Ah, yes, the ups and downs.
Roofstock brought up that classic 18-year cycle.
Right. Although not everyone believes in that anymore.
Yeah, the world's a crazy place these days.
It is. But the point is, markets DO go up and down.
You got to be prepared for that.
Be ready for volatility.
Be ready for volatility. Okay, I think we got to end this section of the cons with maybe the most important one of all.
The big one, yeah.
Profit is not guaranteed.
That's the hard truth.
Owning rental property, IS work, it IS risk, it IS responsibility.
We got to be realistic about that.
No rose-colored glasses here.
Nope. It's not a magic ticket to riches.
Okay, that's a sobering thought after all that talk of potential profits and tax benefits.
It's easy to get caught up in the hype.
Yeah.
But that's why we're doing this deep dive, right? To give you a more grounded perspective than those get-rich-quick schemes out there.
Totally agree. We've covered a lot of ground already, from the allure of passive income to the very real risks involved. I feel like I'm starting to get a much clearer understanding of what it really takes to be successful at this.
Yeah, it's a lot more than meets the eye.
A lot more than meets the eye. But is it worth it? Stay tuned, because we're just getting started.
Onwards and upwards.
So after all that, is it safe to say that owning rental property can be a fantastic way to build wealth
It can.
and generate some of that sweet, sweet passive income?
It definitely has the potential.
But, and it seems like there's always a but here,
Mm.
it's not a get-rich-quick scheme.
No, not at all.
It takes significant upfront investment, it takes effort, and it takes a willingness to handle whatever challenges get thrown your way.
You got to be ready to roll with the punches.
Roll with the punches, absolutely. And before you even think about buying a property, you need to do your homework, right?
Big time.
Understand your finances, understand the local market,
Yeah.
understand what it actually means to be a landlord.
The legal stuff, the practical stuff.
All of it. Because this isn't something you want to jump into blindly.
Definitely not.
Yeah.
That's how people get into trouble.
Speaking of trouble, let's circle back to that article. Is owning a rental property worth it?
Okay.
They did a really good job of breaking down potential costs in a way that really made it click for me.
They did make it very tangible.
They did. Remember that example, the $250,000 duplex?
Yep. 20% down payment.
Which is a cool 50 grand right off the bat. Not nothing.
Not nothing at all.
And then they factor in property taxes, insurance. They even built in a vacancy rate. All those little expenses. And they're not so little when you add them all up.
They snowball.
Plus, they estimated about $4,560 a year for capital expenditures.
What's that?
Those bigger repairs, upgrades, things like that.
The stuff you don't want to think about.
But got a budget for it, right?
Absolutely.
Mm.
And if you're going the property manager route, don't forget those fees either.
Oh, yeah, good point. They estimate around $380 a month for that.
So it all adds up.
It really adds up. And remember, those are just estimates. Real life, Probably going to throw you some curveballs.
Oh, yeah, unexpected costs are going to pop up.
Guaranteed. Okay, so let's play pretend for a minute.
Yeah.
Let's say our listener has crunched all the numbers, they're financially prepared, they're ready to dive in.
Oh, yeah, you're ready.
Now what? How do you go about finding the right property?
That's the million-dollar question.
Because location, 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 right?
It's not just a saying.
It's the truth. But how do you know if a neighborhood's on the upswing or if it's heading downhill?
Well, that's where those warning signs we talked about earlier come in handy.
The roof stock ones.
Those rising property taxes, declining school ratings, lots of for-rent signs.
Hmm?
Those are all red flags.
Yeah, it's like a neighborhood trying to tell you to run the other way.
Exactly. And remember what Investopedia said about market cycles.
Oh, yeah, what goes up?
Must come down. Just because a neighborhood is K-high T right now doesn't mean it'll stay that way forever.
You got to look at the long game, the trends.
The long game. And once you've found a potential property, due diligence is key why.
Due diligence, meaning?
Get a professional inspection.
Oh, okay.
Research the local rental laws.
Got it.
Really analyze the numbers. Make sure it makes financial sense.
No room for impulsive decisions here.
No way. This is a major investment.
But even with all the preparation in the world, things can still go wrong, right?
Oh, yeah, life happens.
Life happens. So what's the best way to kind of plan for the unexpected?
Well, I think a big part of it is having a financial cushion.
Okay, like an emergency fund specifically for the rental property.
Exactly. What if your tenant suddenly stops paying rent?
Oh, no!
Can you cover the mortgage and expenses while you find a new one?
That's a great point. Because speaking of penance,
The wild card.
finding good ones seems like the holy grail of rental property ownership.
It can make or break your experience, for sure.
Thorough screening, like Belong talked about, seems non-negotiable.
Non-negotiable. Credit checks, rental history, background checks.
Mm.
Don't skimp on that.
You got to protect yourself.
Absolutely.
Right.
And if you're not comfortable handling that yourself,
Mm-hmm.
a reputable property manager can be worth their weight in gold.
True, but of course that's another expense to factor
Looks
in.
paid off right.
Decisions.
Mhm.
So it sounds like there's no one right way to do this.
Nope. It all comes down to your individual circumstances, your comfort level, your goals.
And that's what makes this so interesting.
It does.
It's not just about following a formula. You got to be adaptable, informed, ready to handle whatever gets thrown at you.
And let's be honest, a little bit lucky.
A little bit of luck never hurts. Okay, we've covered a ton of information here.
We have.
What are some key takeaways our listeners should walk away with?
Well, I think first and foremost, we've confirmed that owning rental property can be a fantastic way to build wealth and generate passive income.
That's the dream.
It is the dream, but it's not a get-rich-quick scheme.
There's that but again.
Always a but. It requires significant upfront investment, ongoing effort, and a willingness to tackle challenges head-on.
So no passive income without some sweat equity.
Pretty much. And before you even think about buying,
Yeah.
do your research. Understand your financial situation, the local market, all the legal ins and outs of being a landlord.
Because once you're in,
You're in.
there's no easy way out.
Not really, no.
Speaking of being in, that Inklestrad podcast made a point that really stuck with me.
What's that?
Unlike other investments, you actually have a level of control over your rental property.
Oh, yeah, it's tangible.
It's tangible. You make decisions about renovations, rent increases, when to sell.
You're calling the shots.
But with that control
Comes responsibility.
comes responsibility. You're the one making those tough calls.
It's a double-edged sword for sure.
So to sum it all up, it sounds like rental property investing is a complex, but potentially very rewarding endeavor.
It is. If you do it right.
Not for the faint of heart, that's for sure.
Definitely not.
You need to be prepared for the ups and downs, the unexpected expenses.
And the occasional tenant headache.
Oh, yeah, those are inevitable.
Part of the game.
But for those who are up for the challenge, the rewards can be significant.
There's a lot of potential there.
Well, listeners, that brings us to the end of part 2 of our deep dive into rental property investing.
Nailing it.
We've covered a lot of ground,
We have.
from those enticing promises of passive income to the nitty-gritty realities of being a landlord.
All the good, all the bad, and everything in between.
But I think the most important takeaway here is this.
What's that?
The decision of whether or not to invest in rental property, it's a personal one.
It is.
There's no right or wrong answer.
Definitely not.
It all comes down to your individual circumstances, your risk tolerance, and your long-term goals.
Your vision for the future.
Exactly. So if you're feeling inspired after all this,
Great.
do your research, Crunch the numbers and see if it aligns with your vision.
See if it fits into your plan.
But if you're walking away feeling uncertain,
That's okay, too.
totally okay.
We've all been there.
The important thing is that you're now armed with the knowledge to make an informed decision.
That's what matters.
That's what matters. A decision that's right for you, not for anyone else.
Because it's your money, your time, your investment.
And speaking of investments, the world of real estate is constantly changing.
In a dull moment.
So stay curious, stay informed, and as always, happy investing. So we've explored the pros and the cons, the numbers, all that good stuff.
We've really gone deep.
Yeah. Deep dive, literally. But where does this leave our listener who's maybe still on the fence about all this? What's the one thing they should be thinking about above all else?
You know, for me, it always comes back to aligning your investment strategy with your personal goals.
Okay, break that down for me.
Are you in it for the quick flips? Or are you playing the long game?
That's a good distinction.
Because real estate and that Inklestrat podcast really emphasize this. It's a long-term play.
It's not about getting rich quick.
Not at all. It's about building wealth over time.
Through appreciation.
Through rental income, through making smart financial decisions along the way.
And that's where all those tax advantages we talked about can really come into play.
Oh, yeah.
Deductions for expenses, depreciation.
It can make a huge difference in your bottom line.
If you know how to navigate the system, right?
Exactly. Which is why working with a tax professional is so crucial.
Can't stress that enough. But let's shift gears for a moment.
Okay.
And talk about something that I don't think gets discussed enough with all this.
What's that?
The human element.
Oh, yes.
We can talk numbers and spreadsheets all day long, but at the end of the day, you're dealing with people.
You are. Remember how Roofstock described those nightmare tenants scenarios?
Oh, yeah. Vividly.
It made you think twice, didn't it?
Definitely gave me pause. But then Belong offered those interesting solutions like the rigorous tenant screening and even guaranteeing rent payments.
That could be a game changer.
Huge game changer for a landlord.
Wow.
It's all about minimizing risk where you can, right?
Absolutely. And that kind of brings me to something I was thinking about.
Oh, I love these tangents. Hit me with it.
So we've covered the financials, the market trends, all those strategies. But what about the bigger picture, the broader impact of owning rental property?
Okay, I'm intrigued. Tell me more.
How does it fit into the whole conversation about housing affordability?
Oh, wow. You're really making me think here.
Community development, even.
It's easy to get caught up in the numbers.
It is.
But there's a whole social aspect to this, too.
There is. Because think about it. As a landlord, you're providing housing for people.
Which is a basic need.
Exactly. But you're also running a business.
With the goal of making a profit.
Right. So how do you balance those two things?
That's the question. Being a responsible property owner, but also making sure you're making smart financial decisions?
That's the tightrope walk.
It is. And that's actually the question I want to leave our listeners with today.
I like it. Something to ponder.
Because at the end of the day, success in this game isn't just about financial savvy.
Nope.
It's about being a responsible member of your community.
Absolutely.
Understanding the impact of your choices.
Thinking about the bigger picture.
And striving to create a win-win situation for both you and your tenants.
That's the ideal scenario.
Well said. Well, listeners, that brings us to the end of our deep dive into the world of rental property investing.
Whew, we did it.
We covered a lot of ground, from the allure of that passive income to the realities of being a landlord.
It's been a journey.
But, as always, the most important takeaway,
the big one,
the decision of whether or not to invest in rental property. It's a personal one.
No right or wrong answers here.
None. It all comes down to your individual goals, your risk tolerance, your vision for the future.
If this deep dive has sparked your interest,
fantastic.
Do your research, crunch the numbers, see if it aligns with your long-term plans.
But if you're walking away feeling uncertain,
and okay too.
Totally normal. The important thing is that you're now equipped with the knowledge to make an informed decision.
That's what we're here for.
That's what we're here for, a decision that's right for you.
Not for anyone else.
And remember, the world of real estate is constantly changing.
Always evolving.
So stay curious, stay informed, and as always,
happy investing.
Happy investing, everyone. We'll catch you on the next deep dive.